Welcome, ladies and gentlemen. It's Tuesday evening, 5 o'clock, and very warm welcome here from Switzerland, but also from Canada to our online virtual roadshow session. And today we are having gold exploration in Yellowknife. We want to talk and listen to Goldterra. And with us here is David Suda, the CEO. How are you doing, David? Good morning to Canada.
Good evening, Jochen, and to all your viewers. It's so good to see you again.
Yeah, great to have you here on board. Thanks for doing this presentation today. Before we start, we just let everybody check in here because this might take 1 or 2 minutes. Let me do some general remarks upfront before David is starting his presentation. First of all, we are fully complying to European, Great Britain, and Swiss data security laws. As always, nobody can see each other. Nobody can see the names nor the emails. Also, after David's presentation, which will last approximately 20-25 minutes, we want to have a very lively discussion, and so please, I urge you to use the chat function and to write your questions and comments into that. And as always, I will moderate this and ask the questions, and we want to have a great Q&A. So I see some more people here are checking in. That is fantastic. Let me shortly look into that. Yes, that is great. So fantastic. I would say I bring up the presentation, and David, the floor is yours.
Thanks, Jochen. Welcome, everybody. Thank you for joining us, and Jochen, thank you for hosting this webinar. I think it's a perfect time to give an update. We see that the gold price is dying to go higher. We know that it's getting kicked around a bit on certain days, but the trend is higher. The backdrop is strong. I think as we progress towards the summer, we're looking at potentially like last summer, but hopefully it keeps going. So with that, we are positioned very nicely in Canada with a gold exploration play, as many of your viewers already know. I know that we have some shareholders watching, and so I think that for our story, this is the best we've been, and we're really looking forward to the rest of this year and 2022 in the distant future. So we are going to make some forward-looking statements, as I have already done so. That's because we're looking forward to what's coming in the gold market and also to the results from our drilling program. And so if anybody wants to dig deeper into these, please go to our website. But I'd like to dig deeper into what is the most exciting gold exploration story I know of right now. Look, we have everything that I would have always wanted in a gold story. We've got a safe jurisdiction. We're in Yellowknife, Northwest Territories. I could take an Uber from Vancouver almost to the drill in Yellowknife. So that says it all about infrastructure. This is not a story with remote camps, and therefore our drilling costs are quite low, around $200 Canadian per meter all in. And that's really put us in a position to have a full camp that's owned and run by pretty much one company, and that's us. We have a small piece of ground that we've optioned from Newmont, which I'll get into. And recently we've increased our resource to 1.2 million ounces, which puts us at, on a peer valuation basis as very cheap. So I think it's important to talk about why we think we can have success with the drill program that we have initiated in January, just completed, with some drill results still pending and another one to start in July. And the reason we feel that we can be successful is because we have a team that's done it before. Gerald Panetton, founder of Detour, built 2 mines for Barrick, 40 years of experience, tremendous track record, not just able to find gold, but also to raise money. My background is comes from financial services. So, I'm a capital markets CEO, they call me, because I bring relationships to the table. Since I've been involved with Goldterra, my excitement level has never been higher than it is now. But we've had worse markets than we've had now, and we've always managed to raise money for this project, mostly for its merits, but also for our ability to raise money. Joe Campbell is the COO. He was the founder of the company. He was the brilliant man who saw the opportunity to stitch together a tremendous land package when nobody else was looking, where nobody else was looking. And then we have Mark Brown, a great CFO, and I mention him because he actually was the controller at Miramar back in the days when the Con mine was mined. So we've got some real experience from the camp that brings lifeblood to our story currently. And I'll also mention Louis Dion. The reason I do that is because a lot of companies have to go around and say that they're going to find the gold and sell themselves. What we want to do is we want to put together a team that can build it or sell it. And by bringing on an engineer like Louis, who's worked with Gerald extensively, has built several mines himself, we bring that kind of bench strength to the table. So on a peer group analysis, as I mentioned, we're cheap, okay? The share price hasn't moved. We put out the maiden resource, which the market thought was somewhat disappointing back in 2019, just about 18 months ago or so. And that resource came out at 735,000 ounces. We said that we would drill on the two main deposits that made up that resource, and we did. And we added about 64% of ounces. So that puts us very low on this stack in terms of our price per ounce of gold equivalent. So I just want everybody to recognize the fact that we've added a lot of value, and that value hasn't been recognized in the share price. So back to this Yellowknife, 14 million ounces of historic production. Okay, so not just historic production, but high grade historic production. The average grades at the Con and Giant mines were, close to half an ounce grade, so 13 to 16 grams per ton. Tremendous access to infrastructure right next to an airport. We've now got an option with Newmont to explore some claims that are, to our belief, the extension of that past production. And that's what's so exciting. That's the drilling that we did, that we started in January. It took 9 months to make this agreement, but here we are ready to lever all of that drilling and do some more, and it's all financed. I'm not going to go too much looking into the past. I think a slide like this is designed to show investors and to shareholders that when we say we're going to do something, we do it. We try to get it done on time, and I think in the realm of gold exploration, we do what we say and we do it on time. We're not always going to get the results we want, but that's the struggle. That's why we have a great team. That's why we do the hard work. We try to be as efficient with the capital that we raise as possible. So the Campbell Shear, this is what you'll hear us talk about all the time. If you go online and look at any of the YouTube videos, this is the apple of Gerald's eye. He joined the company because he felt that there was untapped potential here, unexplored potential on the extension of what was already mined in the camp. He said, "Why haven't you done this yet?" Well, because we weren't able to make an agreement with Newmont to get onto this ground. So he rolled up his sleeves, and together we made an agreement with Newmont. And this section here, from A to B, you can see it here on this left pane, from A to B. It basically shows you that initially the Con Shear was mined at the top left there, the little red structure. And then from there, that was about 1 million ounces. Mr. Campbell, not our Mr. Campbell, another Mr. Campbell, discovered this huge body here that made up most of the Con mine, 5 of the 6 million ounces. And we're on to and chasing the extension of that. Thanks, Jochen, for highlighting that. So what we did in January was we started to drill onto this, and we onto the extension of this just south of the old Con mine. We drilled almost 10,000 meters. It was comprised of about 13 holes. We've seen the results from, I believe, 9 of those already. We've had some very nice high-grade hits, mineable widths, and certainly grades like we saw at the Con mine. If you look at the footprint of what was mined at Con, those 5 million ounces, and you look at the box, and Jochen, if you can again draw a box around roughly here, around the top of Yellow Rex from surface down to about 500, 700 meters. Then yeah, perfect. If you take a look at the size of that footprint that we're working on drilling now with these 13 holes and the next, let's say 13 holes, you get a sense of what the potential is. If this was 5 million ounces of 16 grams a ton approximately, and we have, some success in replicating that, if what we see now, which is a similarity between the mineralization that we've drilled here and the mineralization that was mined here, you can start to arm wave when you look at the footprint of what that drilling is going to cover and what was mined. So that's the excitement that we feel. And as you look at the results from the 13 holes that we've drilled, 4 of those are still pending. It should give you a feel for the fact that we think we're on to something that was very similar to what was mined. The results so far, as I said, we've had some really strong results. These are a couple of historical resources with some old drill holes. There's no core available. None of this was ever public. It was all in-house, so to speak. So we've followed up with some holes into these deposits, and what we see is the ability to quickly build ounces here. You can see 10 grams over 4 meters, 14 grams over almost 5 meters, and then extending some of these zones. Continuity and extension. If you read our news releases and you read my quotes, if I'm saying continuity and I'm saying extension, those are good things, because what we're doing is we're extending this known mineralization into something that will be, in our view, hopefully a resource. So that's what we're striving towards. That's what our drill program in July will be designed to do, will be to continue to extend and continue the known mineralization. It will be a mix of building up ounces in some of these areas where we've had some past historical data to confirm, and then also to step out and extend that mineralization. So very exciting to know that extension of the Con mine seems to be coming to fruition according to our hypothesis. This is just a quick section here to show you what these zones look like. The most important takeaway, not to get too technical, is simply that we've started to discover what drives these zones, and with only 13 holes, it's just the early days. But what we've discovered is that when we see smoky quartz, when we see sericite, when we see arsino, those are the calling cards of high-grade gold mineralization. And so that when you go and you drill your next 13 holes and your next 13 holes, you start to have those vectors that show you where to go for the high grade, and you can start to be even more efficient with the drill bit. So again, just touching back on our existing mineral resource, it comes from the northern part of this map, still just a stone's throw away from town, very close to infrastructure, not quite down here near the Con mine. These deposits were discovered and worked by Joe Campbell and his team prior to my arrival and to Gerald's. These are very solid deposits, and we hope that we can continue to build those. They're open Crestorum and Sam Otto along strike. Certainly, Miss Pickle is something that we'll look at. It had some very high grade hits in the past. So it's not going to be our focus to build ounces there, but wherever there's an opportunity to build ounces efficiently with shareholder dollars, we'll do so. These will likely be a feeder to what we hope would be a larger mine closer to the Campbell Shear. So again, what's the makeup of the ounces? Why are we focused on high grade? Well, Sam Otto was more of a lower grade disseminated sulfide style open pit target. those are tough. Right now, we're seeing a rise in the gold price, so it's easy to arm wave around some of these lower grade deposits. But what we want is something that's sustainable for the future, and that's why we're chasing high grade. Because as you can see with deposits like Christorum, you're starting to get into grades like 6 grams. And down at the Campbell Shear, as I showed you with some of the historic data and some of the holes that we've seen already from this program, we're into much higher grades than that, and that's what we'll continue to try to add to the roster. And I don't think I'm going to go too much over what we did in 2020 on Crestorum or Sam Otto. Those slides are available here for your viewing. But, the story really is that we've got another 10,000 meters that we'll start drilling after we put out all the results from the 10,000 meters that we just drilled. It's all funded. Our share price has not recognized the increase in the resource or the potential for what we've currently drilled and what we're about to drill. I do want to focus a little bit on what Yellowknife brings to the story, and that's a rich mining history. We've got power and all-season roads. We can drill year-round. We actually like drilling in the winter because the ground is frozen. It gives us the opportunity to get onto targets that have shallow water on top. And of course, we've, with Joe Campbell's strong work, established very strong relations with First Nations, and we have solid support from them. And that's going to continue. COVID has kept us, largely from spending much time in Yellowknife as management. But because mining and exploration are considered essential, we have been able to drill and will continue to be able to drill under the current regulations. And as things open up, I think it will get easier and easier. So we have a very positive outlook there. And as far as capital structure and ownership goes, we have a strong slate of institutional shareholders. Management and board are very much aligned with shareholders. We'll continue to add more institutional investors, and certainly we have a strong home base in Europe. And so I want to thank everybody watching today, all of our investors in Switzerland, Austria, Germany, and out from there as well, with good support from Jochen. We'll continue to build that, and I'm going to open it up to questions now. And thank you very much for listening.
Super, David. Thank you very much. Wow, that was, I think, the fastest presentation I had since I'm doing that. Great, thanks. So let me see. Okay, the chat is slowly filling here, but maybe I can start already with questions. We just saw that with Sam Otto, Mispickel, Crestorum, this is all in the north, and then we can go all the way down to the south to the Con and Giant mines. So does it mean when you start in the north, like with 1 to 2 grams, then all of a sudden it goes to 6 grams at Crestorum, and then we saw in the Con and Giant mines like 16 grams mined. Does that mean that throughout this whole trend, the grades are getting higher?
The grades are the highest in this main shear zone, that rock package that made up, was composed of what we call the Campbell Shear. That's the highest grade known mineralization. But on that main shear zone, on that package, the extension of the Campbell Shear, so to speak, it's relatively unexplored. That's the beauty of this. This isn't like a camp that's been picked over. So it's very possible that there is very high grade mineralization to the north. It's the style of the deposit that drives the grade. We believe Sam Otto and Crestorum to be more secondary style shear zones. Mm-hmm. Crestorum it appears to be an analog of the Con Shear, which is what they were mining when they actually discovered the larger Campbell Shear. So is there another extension of the Campbell Shear to the north? Well, we drilled 2 holes at the end of last winter that tell us that rock package is there. We have only put 2 holes into it. There would be a lot of work to do to vector in on the high grade. That's why we're focusing in on where we can build higher grade ounces quickly. But this is a huge camp. The potential is huge. We don't want to throw away investors' notion that, because we maybe lacked focus some years ago and because we've regained that focus now with the Campbell Shear, that all that potential is gone. certainly if people go back in time and remember some of the grades at Miss Pickle, you probably remember those, Jochen, right? I mean, those are higher grades than we've seen anywhere at any of these targets, and that's right next to Sam Otto. So there's plenty of potential right now in this market with the kind of funding that's available for the kind of work that we're doing. We feel that it's best to focus where we can build high grade ounces quickly, and that's why we're in the south. But there's no question that we don't believe that the high grade is only available right there in that corridor. That's where it's known to be. So, relatively speaking, this is underexplored. There's low-hanging fruit, and unlike, say, Timmins, which has a very similar geology, similar strike length, Porcupine is probably about 70 kilometers long. We have about 70 kilometers of the main break here. There, you have multiple companies over time having produced about 70 million ounces or more. Here we're alone. And on one tiny piece of the puzzle, we're partnering with Newmont, and frankly, we're happy to be partnered with Newmont in that little piece. So I think it's all about potential, and we just simply don't know where else the high grade is. We're chasing it where we think it is, and where we have the best sniff right now.
Okay, super. Before we come to Newmont, I have one more question here on your drilling in July on the Campbell Shear. Can you give us a bit more details what you are planning? Maybe how many meters, what spacing? I mean, it's a 1.2 kilometer strike length you want to go on. So what could you imagine depths-wise? How many holes? What is the idea behind it? So that we get a little bit more meat on the bone, I would say.
Great question. And I think, look, we'll start by saying we're funded to drill 10,000 meters at least, and we'll do that. How many holes? It could be another 13 or 15 holes. It might be 6, depending on, how deep we drill. What we want to do, what we have learned, as I said, is we've gained a lot of confidence from the first 13 holes in what's there. We're not poking around wondering if this is a good target anymore. We've made some significant progress, as I said, in determining what some of the vectors are to the high grade. So, as I said, Arsino, smoky quartz, sericite alteration. And so we're going to look at all the results from this program, and then we're going to determine exactly what we want to do in the next program. One thing is for sure, based on the results around Yellowrex and the fact that we know that we can build ounces quite quickly, we're going to drill some tighter space holes. We're going to see where those zones go. Do they go deeper? Is it one zone or are there multiple zones? Starting to look like there are multiple zones. So we want to build that continuity. So we'll maybe go a little tighter. Maybe we'll go to 50 meter spacing for some holes. If we feel like we can, drive some value that way. And then we'll also mix that in with some step outs, right? Like we want to continue to see, okay, how much extension to this Campbell Shear is there, and how much arm waving we do based on those findings is, that's the excitement. But look, at this stage, we have to keep doing our game plan, and that's what we did with our previous resource. We don't want to go from one gas fire to the next, right? Oh, this is the best target, and then you don't find anything, and oh, this is the best target, and then the share price, will just blow in the wind. We want to continue to back our valuation, as I showed you on that valuation slide, with real ounces. So that mix is vital to our next program, right? 10,000 meters, somewhere between, probably 8 and 15 holes, some deeper, some stepping out, some tighter. More than that I can't say, because frankly we don't have all the results back from this program.
Okay, how much will that cost? Probably what's the drill meter there, because you have such a great infrastructure? It must be a little bit cheaper than out of the boonies somewhere, right?
Oh, absolutely. That's one of the main benefits of all of this, right? You don't have to set up camps. You don't have helicopters that you're paying for to sit on the ground. So we have $200, roughly $200 Canadian a meter drill cost. So that's $2 million to drill 10,000 meters.
That's great. Wow.
It's fantastic. And we raised a little bit of money in January when the markets were rocky. We weren't sure, how things were going to go. It's always nice to pad the kitty a little bit. So we put almost $3 million in the bank of flow through dollars. So that's all going into the ground. We added a high quality institutional investor, in doing so. And we're going to use that to the best of our ability starting in July.
Okay, then there's a question from a shareholder. You are spreading your money to a lot of drill targets, it looks like. Wouldn't it be better to focus just on 1 or 2 targets?
Well, I think that we are not spreading ourselves to many targets. We're focused on the Campbell Shear. We've just drilled 13 holes. As soon as we could get onto that ground, it took us 9 months to make an agreement with Newmont to be able to begin to systematically work south along the extension of the Campbell Shear. This is the reason why Gerald joined the company. So there's never any benefit in disagreeing with our shareholders. But in this case, I would like to just clarify that we are not all over the place. In fact, in our first phase of drilling in 2021, we were 100% focused on one target after having completed drilling to increase the resource on 2 other targets prior to that when we were unable to access this one. So, we haven't stopped moving. But right now we're moving in one direction on one target primarily.
Okay. Can you give us a bit more of an idea with that Newmont deal you did? And you said it took 9 months. So what was there, let's call it, so complicated? And where do you see the real benefit for Goldterra? As you can earn in 60% in an option, right? And so what is the final target? Is this also maybe something like an exit strategy later on that you can do something with Newmont together? Or you say, oh yeah, we are so big, then maybe Newmont is taking us. Can you give us a bit of an idea?
Is that what you want?
No, I think it's too cheap. It's way too cheap.
There you go.
But I want to have your thoughts on that.
Thanks for saying it for us. Look, first of all, the reason it takes a long time to make these kinds of agreements is because Newmont is a large company. They have a lot going on. They had just integrated Goldcorp. Getting their attention as a small company is hard. And I think in this case, they acquired this property when they bought Miramar, I'm not going to speak for Newmont, but I don't think that I think they bought it for other assets. And this was something that was in reclamation. It was put into a group within their company that's mostly interested in limiting any sort of liability, in particular environmental liability. So they did a tremendous job of keeping that site clean and putting it back to the state that they were supposed to. And when you have that type of situation, it takes a long time. There are a lot of considerations. It's not just the commercial side of it, but I mentioned the commercial side of it because I think it speaks to our ability as a management team to get the attention of a company like Newmont to establish a mutually beneficial agreement that we hope can grow. And so what does that become? I don't know. We have to continue to work well with them and show them that we can make progress. Obviously, they are very interested in what we're doing. They're collaborating with us, in terms of our technical plans. But I think that what happens in the future is all upside potential as far as that relationship goes. I think a lot of people would be envious of our position there. So the drill bit will speak. The drill bit will drive what happens.
Okay, super. Do you have any obligations in terms of you have to spend a fixed amount or let's say a minimum amount of money per year, minimum drilling? Do you have to pay anything for the land, something like that?
The agreement's very straightforward, fortunately, and it's very fair to both sides. I think those are the kinds of agreements that companies should make, where both sides have the opportunity to benefit. We have to spend $3 million in 3 years to earn 30%, and then after that we can earn up to 60 if we reach a threshold of ounces on the Newmont ground, and then there's a pre-fees that would happen that would take us to 60. If we find more than 5 million ounces on that ground, then they have a back-in right. And
Hmm.
so I hate arm waving about people always ask, well, how many ounces are you going to find in the next 2 years? Well, how
Yeah,
many would we like to find? Well, we would like to find 5
10
million.
million.
And yeah. And I think the fact that you have certain numbers and thresholds, and that agreement is on our website. Everybody can
Mhm.
have access to it. If you look at the numbers that drive the various thresholds, it speaks to the potential. That's the best, for me. When somebody says, well, what do you think is possible here? I say, well, look at what the agreement with Newmont says, because
Mhm.
that, I think, points to what two companies agree are the thresholds and the potentials for those. That small area actually
Mhm.
in
Absolutely.
question.
Mhm. Let's come to your resource. First of all, when do you think you might have the next resource update? Let's start with that question.
I think we want to be putting out resource updates roughly every year.
Hmm.
This year we were a little bit delayed,
Hmm.
and gosh, compared to some of the nightmares I've seen out there, where management teams guide the market on a resource update or a feasibility study, and they do it in good faith. They do it because they have information in front of them that guides them to that, and then something unforeseen happens, and next thing you know, that doesn't happen on time, and the market punishes them. We were just a couple of months late with COVID, having pushed us back
Hmm.
through 2020, and I was getting some comments saying, "Hey, you guys said by the end of the
Hmm.
year," and then it didn't come out until a couple of months later. So our goal is to be kind of every 12 months
Hmm.
update the resource, because we're
Yep.
going to be drilling lots,
Yep.
and we want to be like, our goal is to drill 2 times or 4 times as much next year.
Hmm.
It's all about access to capital. But what we're seeing behooves us to drill more. And
Hmm.
so the more you drill, the faster you can update, and it's self-fulfilling prophecy that way.
Hmm. Okay. Let's stay with the resource. We saw you have an open pit and an underground resource. Where do you see a critical mass in your resource? Also regarding the categories, because you have a lot in the inferred so far, but where do you see a critical mass where, let's say, Golterra can make the next step?
Well, I think we'd like to see 2 million ounces in the South Belt, and then we'd like to, the way that these deposits that are in north of town, the way that they look, the way that they sit, the grade that they're at. Castorum seems to be developing into a nearer to surface high grade deposit, which could be, a starter scenario. But those are feeder deposits as we see them now.
Hmm.
If we find ourselves in a position to add significant ounces to any of those, to Castorum, Sam Otto, or Miss Pickle, and again back to the comment that the one shareholder made
Hmm.
regarding focus.
Hmm.
We're not going to run and spend a bunch of money to go back and do that. We're
Hmm.
focused on generating ounces that would be the anchor or the cornerstone. So as far as converting ounces from inferred to measured and indicated, that'll all be sort of part of when we get into the various studies, the preliminary studies that will happen in the future. But right now, we're still in full exploration in the South Belt, building ounces there, and opportunistically, taking small amounts of resources to add bits and pieces in other places, or to take advantage of opportunities that we see. We're not going to close our eyes and, but really, I think if investors want to know what's next in terms of resource and converting resources, it's us trying to find the potential for a mine on the Campbell Shear.
Oh, to find a mine on the Campbell Shear. I like to hear that. Okay. So you could possibly think also to go in production once in the future, because this is one of the targets you have. Because Gerald is on board. I know him. He wants to build a mine.
He's not, Gerald wants to do whatever makes everybody more money. This is a guy who understands how to drive shareholder value. He truly does. That's his passion, and that's what we all want to accomplish. I think whether you build it or you sell it, or if build it is one price and sell it is another price, you're going to pick the higher of the two, and you're not going to look back.
Okay. Let's talk about your valuation. We saw it in the chart already, and that you are really on I think the second lowest possibility of the valuation. The average was $42 per ounce. You have $28 per ounce. What do you think is needed to change that in a sense? Or what do you think, on the one hand, the market can do is, of course, a rising gold price, that is for sure. But what do you think is needed that this really changes then, coming from your drill side?
I think as people recognize that this Campbell Shear target is the real deal, as they see the grades coming up, and as we garner attention for staying focused there, and not being all over the place. The market is obviously the backdrop for that. I think conviction comes from the market and also from seeing results. Our conviction from seeing our own results, just look at the first two news releases from these 13 holes that we drilled starting in January. I mean, they're tremendous. Our hit rate on the first 6 holes was 33%, all high grade. If we keep doing that, then it's inevitable. We'll get recognition for it. And so we're emboldened by the fact that we've had early success. We're also apprehensive to feel like that's going to keep going forever, because we all know that you're going to work hard to keep that up, and sometimes you don't keep it up. But what we want is everybody to know that this target is shaping up to be what we hypothesized. It's starting to look, these structures are starting to look to us like what was mined at Con, and we're going to build that thesis. We're going to tell the market about it. We're not just going to blindly throw out results and say, hey, this will be that. We're going to, with each one of the press releases and as we target for the next 10,000 meters in July, we're going to tell the market why we're drilling there, what the vectors are, why we think it looks like that. And so with that explanation, people should start to gain confidence that we have runway to generate more and more value. I think we're undervalued where we are now. But I think if we get a good market, some M&A, a real run in the gold price, then we're not just a flash in the pan company. We're the group that's been sort of under the radar for a long time here. And I think, sometimes, having been a trader for a long time, I've seen this before. It all of a sudden, nothing's happening, and then it's just too late. And we're waiting for our moment, but we're funded so we can drill, and we can wait for that moment with results.
Yeah, but I just wanted to say in that context, because we have also questions here about how many shares are owned by the management. You showed that slide, but maybe the shareholder came a bit later in. And also your major shareholders. I mean, I saw SSI Wealth Management. I know Florian extremely well. And I know that he's like, I call it truffle pick. Yeah, he always picks stuff very early and he always knows where the undervalued stuff is. And also like Conwave, Mr. Meyer. Yeah, they have an exceptional knowledge. And they are big shareholders of yours. So I think those guys know what they do.
We keep adding institutional shareholders. That's where the world that I come from, and that's a style of promotion that I was steeped in. It's a little bit different than retail, in that you really have to spend the time, do the hard miles and explaining what you're doing, and it's very methodical, so it takes time to bring some of these investors on, and so we'll keep doing that. We just added a very high quality institutional shareholder that's mining specialized and focused earlier this year. And so as management, that's why we're also large shareholders. Gerald is, he's up to like 5 million shares or something. So this is very much a big part of who we are as a team. We're all invested, and we'll continue to be more invested as we go along when we can.
Okay, super. An investor tried to find your annual financial report of last year, but it's not published on the website yet. Have you done that already, or do we find it at CEDA?
Our year end is the 31st of January. We're just we're coming up to our annual meeting, so all of last year's stuff is about to come out.
Okay, super. Then this is
answered. We're just finishing our audit, so
yeah. Okay, super. Let me see. Oh, one is asking about if you can send me one of your beautiful caps to play golf. No, baseball cap.
Absolutely. I love sending people hats.
Yeah,
it's one of my favorite things.
Okay, super. If you may, I mean, I have also one to play golf, and if you can put me some together, I will bring them to Frankfurt the next time when I'm up in Frankfurt.
Yeah. So if any shareholders have a request like that, send them to Jochen, and he can, and then I can send him hats, and he can send them to you.
Yes, I do the hat distribution.
Yeah, well, because the securities laws prohibit me to know who's on the call or what their emails and addresses are. So if somebody wants to reach out to me anytime, if you have questions and you want hats, then I love doing that. I'll go to the post office myself, and time for us to drill. It freezes the ground and allows us to drill off of the ice. In some situations, we prefer that. When we don't want to be on the ground, or when we can drill all year round for sure, but we prefer to be off of the ground for about 2 months of the year, 1 month on either side of each season of winter, because of the wet. It gets very wet. So it's similar to oil and gas companies. They call it breakup. In fact, there are actually some restrictions in terms of travel on certain roads. If it's too wet, the roads were damaged. So certain times we actually cannot access some of our targets. But again, we have such a target-rich property that theoretically, if we want to, we could be drilling all year round. But wintertime is the preferred time for us to drill.
Super. Okay, then let me see on my list. Yes, I'm also fine. Oh yeah, maybe one question I got via email from a shareholder. As you have the neighbor gold mining, they're also in Yellowknife. Is this something, let's say, to work together, or what is the relationship there? Looks like he's a shareholder in both companies.
Yeah, the relationship there is, we're neighbors, and we're very familiar with their properties, and they with ours. We know their management team, and look, I think the most important thing that anybody in management can say on a topic like this is that if there's an opportunity to drive value for shareholders, it will get looked at, it'll get considered, and if it's something worth doing, then obviously it would be done. So we're not blind to those types of opportunities. There are more of them than just with gold mining, and I think that the whole landscape in exploration is ripe for some M&A and consolidation and takeouts. I think that's actually what's going to drive our space. Personally, I'm waiting for that round. It's coming. It's not just gold price driven. There has to be a feeling that if I'm not in that one, and it gets taken out, I'm going to miss out. So I got to be in that one. There's a theme developing for sure. And so we want to make sure that we are properly positioned when that happens.
Absolutely. And I mean, we have seen, or we have witnessed that a lot of exploration was missing. So definitely good exploration companies are coming more and more onto the radar, I would call it. And this was also the question about the critical mass I asked you some minutes ago. Final question here from my side, and also here in the chat function. How much money is by now in the bank, and are you fully financed for this year?
We're fully financed for the drilling that we're going to do for the balance of this year. So we don't need to raise money to drill in July. That's money in the bank. Plans are being made, and it's going to get done. And our most recently published, I always just go off of our most recently published number, and so whatever it says in the presentation, I think it's probably around 4 million. So
yeah. Okay, super. Perfect. Let me check here again just to make sure we are not missing somebody. Yep, that looks good. Okie dokie. Also from my side. Yep, that's all done. Perfect. Hey, David, thank you very much. And we made it just below the hour. That's great. Yeah, thanks for your presentation. All the best. Please say hello to Gerald also when you see him. And yeah, we wish you the best for the drilling season. And I have a very good feeling that, yeah, still, as you also have some assay results outstanding here, so which have to come up in the press releases. It will be quite busy the next 2-3 months, and then you start again to drill. So we will see a very good steady news flow. I have the feeling.
Absolutely, we're very pleased with what we've managed to put out so far, and we look forward to doing more of that. We just have to keep drilling, and we have to keep on putting those results out into the market.
Exactly, and we want to see a bigger resource then. Great.
Don't we all?
Super. That's how we do it. Love it. All right. Hey, David, then thank you very much. Wish you all the best. And stay healthy. That's the most important thing these days. And we talk soon.
Thank you so much. Thank you, everybody, for watching. Thanks for hosting, Jochen. You've done a tremendous job, as always. And if anybody has any questions or wants a hat, feel free to reach out.
Super, thank you. Yeah, ladies and gentlemen, that was our virtual roadshow, online roadshow presentation with David Sula, the CEO of Goldterra. And you heard it, a really heavily undervalued, great exploration story out in Yellowknife here in Canada. And also with Gerald Pennerton, the founder of Detour Lake and builder of several mines on board. I think this is quite a no-brainer at those share prices, or a share price of around 26 to 28 Canadian cents. And also important is the 10,000 meter drill program is fully financed. The company has enough money in here. And I have a pretty good feeling that, again, they will bring some good results here to the table. And also we look forward to the next resource update, then probably in the, hopefully Q1, Q2 next year. Yeah, check out the company, and thanks a lot for watching us. Please stay safe and healthy. This is the most important thing these days. And unfortunately, we cannot still travel, because I know David and myself, we would love to come to Frankfurt and to Vienna and Zurich and Geneva and Munich and whatever. But unfortunately, it is not yet possible. We hope that this restarts really early next year again. And it would be great to see you all there in good shape and healthy. Thank you very much for your continued support. And if you want to head, please send me an email or write directly to David. I will for sure distribute the those hats because I have also one for my golf bag. Thank you very much, and bye-bye from Switzerland. All the best.
Thank you. Bye-bye.